where does this end? What is it? Your goal is trying to get through the goal line first, and that's your present for doing all this. So yeah, I think a lot of these companies have to explain a little bit more to their shareholders what is a return on investment. You can't just spend hundreds of billions of dollars in this to come out first, because what do you get for first prize? We don't know.
Ken, where are you finding opportunities right now?
Actually, this opened up a lot of opportunities, to tell you the truth. I think Microsoft is one of the best opportunities. This software company got hit hard with earnings, as we saw. But, we forget that they have 1.1 billion licenses out there, right? They have all the different verticals, from cloud, Azure, they're involved in AI. It's so funny. They're AI themselves with Copilot under the 360 and Windows and Teams and all that type of stuff. Then you add to Microsoft, $400 should be decent support. You could buy some here, 400, maybe a little bit more if it goes lower. And JP Morgan last week started the week around $323 a share. I think ended around 302. JP Morgan, Jamie Dimon, the best in class. I see, like your previous guest, I see steepening yield curve and those spreads widening, help out banks. So again, some of this dislocation, throw the baby out of the bathwater, so to speak, has opened up opportunities for Microsoft to get all those verticals, and JP Morgan, best in class.
So interesting in the banking space and the steepening yield curve, Ken. Is that on expectations that the Fed doesn't cut as much as maybe the markets are pricing, or is it a debasement trade story? Is it a reallocation out of US assets? What for you is driving yields higher at the long end?
Yeah, I think inflation expectations, and you kind of get to a point where you're looking at the spreads, you're seeing this, and inflation is not really going away. And I think at the end of the day, you're going to start seeing rates continue. Look, we had 6 rate cuts, and the yield really hasn't moved much of anything. We're still kind of pegged at 4.10. I think be careful. We really hasn't moved much of anything. We're still kind of pegged at 4.10. I think be careful what we wish for, though, Tom. I don't want a whole bunch of rate cuts, because that's accompanied with lower economic activity. We should be more on the side of, like, not bad news is good news, but like good news for the economy is good news for the market. So I'm one that hopefully we don't have a lot of rate cuts, because that also means there's some other problems underneath the hood that we're not thinking about.
Is the labour market a problem under the hood? How confident are you that the US labour market holds up?
That's a biggie. And this is what we're trying to figure out. It's definitely a cross current because of AI taking out, again, companies like JP Morgan are going to embrace technology. Unfortunately, they're going to cut a number of people, I'm sure, but they're going to become more efficient. And we've seen big cuts from US companies, 10,000, 20,000. I think that's going to continue to some point. It hits some type of equilibrium. I don't think we're there yet. So I think we're going to have to deal with some of these layoffs and some of the disruption that AI is causing in the labor market.
As you talk about your expectations that maybe inflation is stickier than some would expect, Ken, we got some great reporting once again on what's happening in the chip space. I mean, this has been a long-running theme now in terms of memory chip pricing, but the fact that that's starting to hit the real economy in pretty substantial ways. The chip makers, particularly in South Korea, have performed so well, that the SK Hynix of the world, the Samsungs of the world, part of the picks and shovels trade when it comes to AI. Do you have a comfort level in terms of getting exposure to those kind of names, or is that trade already done?
I think that trade is already done. I think there's been so many opportunities. Right now we're, sometimes you're reactive, sometimes you're proactive. At this point, I think we think software companies over, let's say, chip makers at the moment, because of what's happened. Seeing Microsoft, raise guidance, all the goodies you get within, the stock is down 80 points. So to us, that created more value for our software. Again, we may be back in hardware again, if that sells off because of AI. And you see this constant rotation. Unfortunately, the biggest thing that we don't like about this market is the lack of leadership. You really cannot have consumer staples as your leader for some time. So we know that market, money's not leaving the market, but it's rotating. The big asset managers have to stay invested. And so they're kind of stuck in the consumer staples. So we will not be adding to any consumer staples. In fact, we're trying to peel some off and rotate back to those areas that in some part got decimated by the AI story.
Interesting that you don't want to see that leadership from consumer staples. That story's not going to last. Ken, before we let you go, you reflected on the rotation trade. Are you seeing diversification as well out of the US into Europe, into Asia? And how much conviction do you have that could become a more entrenched theme through this year?
Right. You always kind of think, where does capital go where it's treated the best? And it's sloshing around. So one week you think money's coming into the U.S. by different deals that are signed by this administration. And other times you see, some of the tariff talk and tough tariff talk with Asia and Europe and so forth. So I think it's kind of choppy. I don't think there's a definite trend between U.S., Euro, and China, as most people have been very choppy.
Okay, Ken, thank you very much indeed for your insights this morning. Ken Mahoney of Mahoney Asset Management, thank you on the lack of leadership coming through in terms of the US equity space. And interestingly, software versus chips, at least for now. Now, Bridgewater Associates founder Ray Dalio, of course, says there's been a general diversification away from US assets. We were just discussing this, of course, with Ken, especially by global central banks. He's been speaking to Bloomberg's Francine Lacqua at Davos last month.
We haven't begun the capital war yet, and I think draw attention to it. I don't even think people think capital war. They hear a lot about trade war. And how does a capital war work, and what is happening today pertaining to the markets and so on? Okay. The big issue is the opposite side of a trade imbalance is a capital imbalance. And so we have an issue now with the changing complexion of what is owned by capital. Right. So central banks buying gold and replacing bonds and other assets. We see these things happening. The changes in that mix. And so President Trump's speech was very, very important because there's a line, a red line, that has to do with military as it pertains to Greenland. And if there is a military move, it has capital war implications. But beyond that, the issue of what is held as a reserve currency and the whole capital issue is something that's extremely important, not paid much attention to, and not understood.
Ray, a lot of U.S. policymakers or U.S. chief executives will push back. But for me, it's very clear that actually this week, if we are, relieved that the U.S. is not invading Greenland militarily, maybe there's a big shift, right, in this alliance. So is there going to be a big de-dollarization? Are you going to see countries outside the U.S. move away from the dollar quite quickly?
Generally speaking, you're seeing a diversification away from the U.S., right? Last year, U.S. markets, wonderful performance, but underperformed the rest of the world. And you're seeing a shift in the assets held.
That, of course, was Bridgewater Associates founder Ray Dalio speaking to Francine Lacqua. Coming up, a memory chip shortage putting the squeeze on big tech. Neil Campling joining us next. With the details, stay with us. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Welcome back. This is Bloomberg Markets. Tech industry leaders are warning about the impacts of a memory chip shortage as the crunch is expected to worsen. There's no sign at all that crunch around memory chips is going to be alleviated anytime soon. Let's bring in Bloomberg's Neil Campling with the details. Neil, how much of a problem is this right now?
It's a big problem, but it's going to get worse, Tom. I mean, we've already seen the prices of the memory chips, the core memory chips, DRAM, have gone up by 60% this quarter compared to last quarter.
That's just a quarter-on-quarter comparison, 60%.
Just a quarter-on-quarter comparison. And we have to remember that to put new production in, it takes between 3 years and 5 years to go from concept to an actual manufacturing plant producing chips that are actually usable in devices.
And this is because they're being diverted to the data centers being fueled by the hyperscaler spend. Is that what's happening? And is there any sign that pull towards the data centers where are we in that journey?
I think if we look at for one thing, the CapEx spends that we're seeing, we're already seeing probably in a region of $650 billion being spent in 2026. So it's actually getting worse, not easier. The reason then, what happens with this DRAM memory, let's consider the chips themselves, the AI chips of NVIDIA.
Yeah.
If we look at the H100s that people used to always talk about, and then we go forward to the 2026 version, we're using 6x more DRAM capacity in those new chips compared to the H100.
That's in the Blackwell. So six times more memory in the Blackwell versus the Hopper.
Absolutely. So 6x more.
Yeah.
And we've got the huge new CapEx, and we've got the new sort of hyperscale builds. There's just not enough to go around. And meanwhile, we still have to have the memory in PCs and smartphones, for example. So this problem is going to last for quite some time.
Is there any supply out of China when it comes to memory chips?
Unfortunately, well, the memory chips in China that are produced are more kind of legacy chips, if you like.
Yeah.
So again, like with every technology transition, you still need the fastest, the most sort of advanced memory. So really the legacy memory is available in China, but not the advanced chips. So there's still, I think I've seen some predictions by some that saying China's still 3 to 5 years behind the technology curve.
So what does this mean for the smartphone makers, the Apples of the world? What does it mean for the car makers of the world? Cars, EVs, pulling in, thousands of chips in some cases. What happens to those industries in this environment then? How are they sourcing their chips? What does it mean in terms of constraints? What does it mean in terms of pricing?
Well, the most obvious one is pricing.
Yeah.
Pricing is going to be massively inflationary. We've got big issues, I think, in terms of even with us as consumers using these chips in our smartphones. Clearly, prices are going to go higher. As far as supply is concerned, in some devices, like a laptop, they're probably going to use less memory in those laptops, which actually makes them slower and less efficient. And otherwise, it may even be that, like the old days when the iPhone originally came out, when we had 12 weeks to wait for a new iPhone, perhaps that happens again at the end of this year, that we're not going to be able to get the devices we want as quickly as we want them. That could be a real issue.
More broadly on this tech sell-off that we've seen, Neil, that I know you've had a finger on the pulse of, where do you think we are in that journey? We were just speaking to our previous guest, Ken Mahoney, saying that he actually thinks there's an opportunity right now in software. He favours, at least in the short term, software over the chip makers, over the picks and shovels, because the baby has been thrown out with the bathwater. In some examples, he noted Microsoft, for example. Are we starting to see a recalibration? Are we starting to see investors taking a bit of a pause on this kind of sector-by-sector disruption story?
To be honest, I think there's still so many unknowns that it's not easy to extrapolate exactly who the winners and losers are. I dare say that on the Bloomberg terminal today, there was a great article actually talking about a fund that's done particularly well, having sold software aggressively a long time before this happened, because many of the application software companies are probably not going to come back. There are infrastructure software, which are still probably winners, and as you say, bath with the bathwater potentials. But there are other companies out there, ServiceNow, SAP, as examples people mention, which probably won't come back to the same extent as before.
Yeah, this is Nick Evans, Polar Capital fund manager,
Absolutely.
One of the best performing. And there's a remarkable quote about saying we're not going to own any of these at any time. We won't go back to these companies. And he includes in that list then HubSpot, SAP, ServiceNow, Adobe.
Yep.
It's one voice, but it's a voice and a fund that's performed very well.
Absolutely, and and again, I think Nick actually has spoken before about valuing these companies based on terminal values. What are they worth in 10 years' time? He's pointed to the fact that many of these companies, you don't know what their value will be in 5 or 10 years' time, and that whole idea of investing today is about those future returns, the future profiles of those companies. In such uncertainty, there is big risks around many of these companies when you can do so much with these agentic AI apps that are out there today. And they have moved on so fast and so quickly compared to where we were even a year ago.
What would you say to those, though, Neil, who would say, look, there was the DeepSeek moment about this time last year, a massive sell-off. Turns out if you bought then, you'd be sitting pretty. I mean, we're looking at some of these big tech names in the US down, 16, 17% since January the 28th, since some of their earnings came through. Amazon is on one of its worst losing streaks in decades. There will be some saying, reflect on what happened with DeepSeek and fill your boots.
Yeah, and I think if you're sort of bucketing everything together in the same way, obviously there are definitely opportunities that are out there. But like we've seen with every single technology wave, there's only ever a handful of winners, really, in a big picture thing. So we've seen that before with the dot-com situation. We've seen that with smartphones. We end up having two main operating systems. We're probably going to have a small handful of sort of comprehensive AIs that work over many years. So I think you have to be very selective of where you allocate capital.
Neil, what are you and the team watching for in kind of the days and weeks ahead, particularly when it comes to this AI and tech story? What is top of mind for you?
Well, we're going to see very soon, obviously, NVIDIA's earnings. That's going to be keenly watched, certainly. And I think still we're seeing the evidence that the AI spending is still helping the semiconductor companies. I look to the Taiwanese, which is very export-heavy. Their GDP, they came out on Friday. Can you imagine having this in the UK? They came out and said 7.6% GDP growth expected in 2026.
Yeah.
They previously expected 3.5%. That is
more than double.
More than double, and it's because of the impacts of AI and the export to the US, of course, which is the primary partner.
That economic impact in Taiwan, at least. Neil Campling, thank you very much indeed on these markets, the AI disruption impact. Still ahead, US Secretary of State Marco Rubio sits down with Bloomberg News Editor-in-Chief John Micklethwaite to discuss the growing pressure on transatlantic ties. We bring you that interview. This is Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly. Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Technology is embedded in
conference.
I think that's a difficult war to say anyone is winning. The Russians are losing 7,000 to 8,000 soldiers a week. A week. Yeah, not wounded, dead. Ukraine has suffered extraordinary damage, including, overnight, and again, to its energy infrastructure, and it will take billions of dollars and years to rebuild that country. So I don't think anyone can claim to be winning it. I think that both sides are suffering tremendous damage, and we'd like to see the war come to an end. It's a senseless war. So obviously we continue. Look, we don't provide arms to Russia. We